I'd like to take us back to Christmas Day. On Christmas Day, we saw a bit of a rally up inside Bitcoin. But what happened next? We saw at this point we did a video and I mentioned the levels to watch were these ones, especially the 99,934 and the 95,786. Let's just fast forward across time to see what actually happened. We can see we tried to get above the 99,934 but were unsuccessful. And then we came down to the 95,786 level. It's very important to know where the structural levels are inside the market. If you don't know where they are, you're going to be in a lot of trouble. And we can see that the 93,684 level was hit. Now, where did these levels come from? But before we get into that, in the last video, I was explaining that the 95,786 and the 92,732 were the levels to watch across the past couple of days. And what did we note? The price tried to again get above that 95,786 but was unsuccessul. It's currently making its way down to 92,732. I'd just quickly like to thank the people who reached out and bought me a coffee on buymeacoffee.com. Thank you so much to Arjun, Kevin, Signsov, and Srinagar. Just beautiful, beautiful comments, and thank you too to Crypto Turtle. I'm so happy you're finding the new course really valuable. Okay, back to Bitcoin. Now, where do I get these levels from? They come from the Level 1 and Level 2 standard certification markup of this case, Bitcoin, and they're embodied in the monthly service indicator. Now, what are the levels that we need to look at right now? And you can see these levels are rightwards looking. We just project them across to see where price can go. Now, the levels that we need to look at right now for Bitcoin, if we do not hold the 92,732, we're likely to come down to the 90,632 level. If we manage to get above the 93,684 and then challenge the 95,786, we're on our way to 97,180. A lot of people talk about Wyckoff distributions, and that's from Richard Wyckoff. Wyckoff said that you must look at the market on its own terms. That is, you must look at the ebbs and flows of the market in real time. Don't attach stories to it because the institutions are always playing with your emotions. Just look at pure price action. These levels are the world's most powerful smart money buy and sell level detection system. You can see how well they play out across time. And if you've been with us for the past few years, well, past 4 years, you'll see that this methodology has proven itself time and time again. Now, which area is it favoring? To understand this, we must understand a little bit about structural failure. We have a structural failure right at this point. We are under negative price momentum at the current time. Fortunately, this 92,732 level is quite a good level of structural support. You can see it's thicker than this one. That is a structural resistance level because it was passed through, underside retested, structural failed, had negative structural attraction back to the 90s to 732, but had a deal of positive air in there which pushed it up. So the 93,684 level is one to keep your eyes on. If we manage to get above the 93,684, we have a positive CTKS gap. Now that means that price can move up rather quickly, but it will encounter a degree of structural overhead resistance at 95,786. What we're going to do is to zoom out a little to see what we could expect from Bitcoin in this time of the cycle. A lot of people are probably wondering, why is Bitcoin coming down? After all the press stories are so positive. It couldn't possibly come down. I'll show you a couple of charts that just explain this. We are currently seeing weakness in the S&P 500 futures as well as the Nasdaq futures, as well as the Dow futures and the Russell 2000 futures. Now, Bitcoin is very sensitive to what the US stock market does, so please be aware of this. You can see it's moving in directional alignment to the major indices. And please keep your eye on the Russell. It throws really good signals for crypto. One thing that you must be aware of, the S&P 500 is under resistance. NASDAQ is under resistance. When we came up, we certainly came up, but we've unfortunately made a lower high. And what about the Russell? Under resistance. This is quite a gap down, so what we've seen is nothing more than a normal retrace inside the markets. You always need to prepare for up and down and neutral cases. And look at the Nikkei, it's just open. Oh, people are buying the dip, go Nikkei! And of course the Bank of Japan is talking about increasing interest rates for the first time. Now what does that mean? All the Japanese savers are saying, oh no, I must get money out of bank. I have a friend who's Japanese and he called me and said exactly that. Okay, I hope I did his accent justice. But what we're seeing here is because the rates are coming down, that means that they're trying to get their money out of the banking system into the stock market. The change in the ultra-low rates inside Japan have got people excited for increased yields. And what do we see here? Ooh, a bit of positive momentum out of the Nikkei. But it's pretty early days. Let's see what happens. Around this time in the cycle, we tend to get a bit of negative price momentum. It happened in the 2016 cycle as well as the 2020 cycle. And we're seeing in the 2024 cycle, it's happening right now. So we're getting a bit of a retracement. These retracements may not look like too much, but they're pretty brutal. Personally, Bitcoin can only go up over time, but that doesn't mean it doesn't act in a wave-based function, up and down, up and down. A lot of people forget about the only up concept has a lot of downs in it. And when you look at bull market run activity, those down percentages can be vicious. That's why you must prepare in advance. Don't get sucked in to retail. Retail is all about emotional. It's like this. You've got to buy now. This is the lowest point ever. If you don't get it now, you'll never get it at this price ever again. Don't get sucked in. If we get a black swan, you'll definitely get it at that price. But of course, don't worry too much about those either, because they're incredible opportunities to buy. Just keep in mind, the up and down nature is your friend. It is not your enemy. In retail thinking, only up is the only way to go, and each time it goes down, unfortunately people sell, and they require a degree of confidence before they get in, and that generally pushes them in around the tops, only to get dumped on by the institutions. You instead want to be an institution of one. That's why you're here. Institutional traders and investors do a lot of research. They stack probabilities, they run numbers, they do all sorts of things that other people simply don't do. And when we look at the capitulation indicator for Bitcoin, do we see any capitulation at the current time or any blow off tops? Nope, everything is smooth sailing, well, albeit a little bumpy. It's important to be able to look through charts as well. Now, what do I mean by that? Total crypto market cap exerts pressure, both buy and sell pressure, on Bitcoin and vice versa. That is, Bitcoin exerts pressure on total as well. Therefore, we need to understand where the structural levels are in order to make intelligent buying and selling decisions. We can see up around this $3.36 trillion level, there was a substantial amount of structural overhead resistance. We simply couldn't get through it, and we've been selling down ever since. One of the things that we've done is we've fallen through this negative CTKS gap all the way down to around 3.16 trillion. We're currently at 3.2, but we touched just around that $3.17 trillion mark. What we actually can see now is that we have positive CTKS gaps on the way up. Now, what that means very quickly is that we could move up very, very sharply, but there's still structural overhead resistance there that we need to be aware of. Also, the crypto market is encountering, for the first time in a long time, some real structural support levels. This is good. This is what we want to see inside crypto. The Crypto Fear and Greed Index was 74 2 days ago, and then it went to 72 and it's now up to 73. Keeping your eyes on fear and greed is a really good idea. When the markets get too overheated, you'll get a dialing back because prices will retrace. This is just normal. Extreme greed means extreme confidence. Extreme fear means extreme anxiety. Both are retail. You want to, as an institution of one, read these particular figures and do the exact opposite. We've had 151 million in total liquidations, and you can see the vast majority are long liquidations. That's pushing the price down. And there's still a lot of sell-side liquidity just below 93,000, so just please keep that in mind. When it comes to the spot Bitcoin ETFs, we've seen a lot of selling activity across the past week. It's been quite negative. However, in terms of the Ethereum spot ETF, we've had some pretty good inflows of late. BlackRock and Fidelity have been going at it neck and neck. If you've been following the cheat sheet, you understand why the main market sold down in the last trading session. A lot of people talk about Santa rallies and all of those things. They are just stories. The charts will tell you the truth, and everything else is literally just an opinion. You want to get deeply involved with the facts if you want to make money. It's also really helpful to understand that all markets are intercorrelated and interconnected. When the Japanese market came online and there was a bit of euphoria there, that's actually made its way into the crypto market as well. Every market impacts every other market. Giving up the retail mindset is not easy. There are so many people that want to just overload you with emotions. When your mind is overloaded with emotions, it can't function correctly. It cannot make rational decisions. And we know all results come from the mind, and a better mind creates better outcomes. Better habits create a better life. Being non-emotional about the markets is incredibly important. And always realize opportunities and life reset daily. If you're dedicated and committed, you're either winning or learning and never blaming. The reason that we don't blame, it disempowers us. It's not about other people, it's about us being the best version of ourselves. And always remember, every single life pullback that you encounter will give you strength for the next life rally. In fact, you can't get to the next life rally without that pullback. It's just like the markets. That is exactly what's happening at the current time. The market is going through a pullback so it can digest all of those juicy gains. So every day we can show kindness, integrity, and gratitude, because life isn't about competition. It's not about comparing yourself to anyone else. It's just about looking in the mirror and saying each day, how can I be better? The focus is just on becoming the best version of yourself that you can be. Don't give two hoots about what other people are doing, or if they're showing off or driving Lamborghinis. That is irrelevant. Confidence is very quiet. And just know that you are worthy just as you are, so therefore you can go slow to go fast, and the universe does want you to succeed. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.